America's economy runs on 18 wheels, and America's 18-wheelers belong in the fast lane to the future, running on clean, abundant, renewable natural gas.
Hello guys, it's your fellow investor here with another video. In this video, I'll be talking about a company called Clean Energy with ticker symbol CLNE. I got a request in the comment section, so if you have any interesting tips, please let us know. I'll be talking about what they do, what is their mission, what are they doing right now, and if this stock is a buy. Thank you for joining in, because here we discuss underrated EV stocks, underrated penny stocks, and stocks in general, so we can make better investments for our future. For example, if you subscribe to the channel, this investment is absolutely free and you can get immense value in return. So as we can see on the screen right now, I brought up the graph, the chart, and it's been doing quite nicely for the past few months. So we can see for past 2 months it actually did over 250% move up, and I don't think it will stop anytime soon, because we know that Mr. Biden is going to be elected and he wants to spend over $2 trillion on renewable energy and this energy sector. So this is going to be a huge positive move for this company and EV companies and renewable energy companies as well. So overall, this is very good ideology of investing if you want to invest in a few, 3 to 4 years. So this is already checked. If it has midterm potential, it definitely has. Long-term potential, absolutely, and with some luck, it will have potential even in the short term. I will be using their investor presentation from September 2020. I couldn't find it on their website, however, when I typed it in the Google, it popped up, so I'm glad they have something. So let's jump straight into it. So here we have really nice overview of their company. So they say they are in 41 states across the US and Canada. They have about over 401 million gallons sold. They have over 550 natural gas stations, which is quite a lot. They have over 1,000 fleet customers. That's also quite a lot. They have over 1,000 jobs. And in 2019, Clean Energy reduced more than 745,000 metric tons of total greenhouse gas emissions by switching to renewable natural gas fuel, which is equal to a lot of positive things, as you can see. Basically, Clean Energy is the only natural gas fueling solutions provider in the industry to offer CNG, LNG and RNG fueling. As we can see, they are offering it to regional fleets, airport transits, refuse fleets, heavy-duty trucking, public transit, construction vehicles, and many more. Here we can see really nicely shown how much gallons of fuel is used per year in different sectors. And as we can see, there's most fuel is being used in heavy-duty trucks. Their total addressable market, which is 1.5 billion gallons a year in the transit sector, 2 billion gallons a year in the fleet services, 2 billion gallons a year in the refuse, and over 35 billion gallons a year in heavy-duty trucks. What I really love about this company, we can clearly see how they are doing right now and in their past, because they've been founded in 2001, so they are over 20 years working and being active on the market, and it seems like they are having sales since 2009, so they are definitely not some kind of startup. So since the introduction of the 9L natural gas engine in 2008, refuse market growth has averaged 30% annually. Natural gas now represents 10% of this 2 billion gallon market. Clean Energy maintains 60% market share in refuse, so that's important. They claim they are more than just a fuel. They say they have turnkey solutions. They offer not only fueling services, but also service and support with many technicians nationwide, compressors with equipment, proprietary station technology. They have many grants and financing, such as over $430 million in awards. They offer renewable fuels, engineering and constructions with over 420 stations built, and facilities modifications as well. Here we can see on the map that they are largest nationwide natural gas fueling network. We can see public and private stations held by their company, and as we can see there's a lot of them, which really puts a confidence in me that they are well established. Another good key point from their presentation that they have numerous recognized fleets and shippers fueling with natural gas, such as Honda, FedEx, Costco, Pepsi, Oops, AT&T, McDonald's, Amazon, Starbucks and many more. They are driving future growth. Natural gas is the best solution to economically address environment issues caused by transportation today, and they're absolutely right. Because electricity or the EV vehicles are not really prepared to be at a big scale. However, natural gas is. There is the infrastructure, there is the solution, you can get it right here, right now. To some catalysts and opportunities for growth. Zero Now truck financing program to expand natural gas into the large heavy-duty trucking market. Continued acceleration of acceptance of redeemed renewable natural gas as a way to combat greenhouse gas issues. Natural gas advantage, clean energies bulk CNG provider, expansion of natural gas virtual pipeline. As we can see, they're trying to penetrate the heavy-duty trucking market, which is always nice to see because this market is enormously big. Total is their main partner, they are 25% shareholder of the company. They are investing in the growth of their business. They also joined their board of directors. Their credit support for a unique truck leasing program. Here is some summary of their program Zero Now. Zero emissions, zero added costs. They have CNG tractors, diesel prices, partnership between Cummins, truck dealers and clean energy. Exclusive pricing and 5-year engine warranty. So this is really something what I would like to see as a company, that I like to see some kind of warranty on their products, and 5-year engine warranty, I think that will do for me nicely. Guaranteed fuel spread, CNG price as low as $1.5 below diesel, 5-year guaranteed contract, mitigate project risk, an optional zero capital station. Zero emissions now. They are CARB certified near zero. It means 2023 CARB certification for operation in California, 100% renewable natural gas and up to 90% reduction in greenhouse gas emissions. So this is just amazing. So here we can see their Redeem program. Fleets from transit agencies like LA and Santa Monica to companies like Oops, Kruger, FedEx and Republic Services are signing up. Redeem volume growth is here shown in the nice graph, how it goes from 2013 since the market introduction up to 2019. We can see that it's scaling really nicely. Biomethane supply chain, that first it needs to be captured and extracted, then it goes through a process of purifying, then it enters the interstate fuel pipeline, and at the end it's made available at fueling stations. It's really simple image which should be shown at more investor presentation, I would say. It examples quite simply. Question is, how clean is natural gas? A near zero natural gas truck is certified to produce 0.0 grams /BHP/HR and NOx versus a battery electric truck plugged into the California grid produces 0.07 gram /BHP/HR and NOx versus a diesel truck which produces 0.2 gram /BHP/HR and NOx. So we can see there is quite some difference. And another reason why should fleets convert to natural gas. So here we can see what there are a chart or graph which shows how much emissions it produces, each given fuel. And we can see that renewable RNG, which comes from dairy farms, it produces negative emissions because instead of the waste staying being in the open space and the emissions would go into the atmosphere, instead they are being transported via the pipeline into their fueling stations. They say they will continue to grow their volume and strengthen their financial position by focusing on burgeoning large markets of heavy-duty trucking and virtual pipeline, growing core markets of refuse and transit, increasing penetration of Redeem around the country as the best fuel to meet greenhouse gas issues, and leveraging strategic partnerships with Total and BP. So in the next slide we will see their continued growth and improved profitability, and here we can see their volume just going up and up. Sometimes it's about 10%, sometimes it's just few percent, it depends on the year. However, the important part is that it always goes up. And here we can see their revenue going slightly down. However, this is explained by their growth. And since now with Biden being elected, there is going to be way more interest in renewable energy, natural gas, and the other better uses of fuel. Here we can see that their selling, general and administration reduction is going down. This is the basically good stuff, because at the beginning it usually costs more because they need to grow more and expand more, but the more they are being established, these expenses are going down. So it's good to see that they're going the right way. Their cash and short-term investments decreased, and their land, property and equipment has decreased as well. Their total assets therefore decreased, and it's good to see that their convertible debt is zero, and that they don't have much of a long-term debt because they can easily pay it out with their cash and short-term investments. And their total stockholders' equity is kind of stable for past year. So overall they don't have any amazing balance sheet highlights, but what is important is that they are really well established. They have nice growth of revenue per each year. They are very scalable. They have many stations. They have good cooperations. They have good partnerships, and overall they are looking really bright for the future. And if I move back to this chart, we can see that since Mr. Biden's been elected, the stock went up dramatically, and that's simply from the fact that people started to look for companies in the energy sector or in the natural gas sector, because it's really in the short term and mid term is the number one answer. It's not the electric vehicles, which will be dominating in 5 to 10 years, maybe 10 to 15, 10 to 20, but right now 3 to 5 to 7 years, this is natural gas for the heavy duty trucking, and this is going to be the next big thing, as there were electric cars a year ago or right now. Maybe 3 years later there's going to be big boom in the heavy duty truck sector, such as Hyliion, here clean energy, or even NEE, which I might be talking about in the next video. However, this video has been already so long, so I think I'll just cut it here. So is clean energy with ticker symbol CLNE a buy? Well, right now we're having a 4.5% discount, so in my eyes it is definitely a long-term buy, at least a mid-term one, since there is going to be very nice things happening for these kind of companies, such as Clean Spark, Hyliion, even Tesla, clean energy, and everyone who tries to reduce the emissions in the air. I would say these companies are going to get a big boost thanks to the Biden's $2 trillion planned investment into infrastructure, in some kind of donations and stuff like that. Also, they have some credits which they can use or sell. They are also offering their truck solution. Maybe I will have to do another video, since this one is going to be quite a long one. So I hope I brought you some value. If I did, please subscribe to the channel so you don't miss out on any new upcoming videos, and click on that thumbs up as well. Both helps me out tremendously. Let me know down in the comment section what are your thoughts and opinions. Are you in this company already? Do you think this company can hit $20 in the next year? I'm all ears. With that being said, thank you so much for watching, and I'll see you in another video.